Are you paying too much in taxes? You're a nurse practitioner entrepreneur, and I bet you knew sooner these 10 tax secrets that can help you save money in taxes. I've been serving my MP clients for 5 years now, and I want to share these secrets with you as well so that you can pay the IRS less in taxes. I'm Dakota Grady, the accounting and tax doctor, and I'm all about helping you to overcome bookkeeping and tax pitfalls with proven strategies to help you to transform your business finances. Let's get into it. So, you're tired of paying taxes to the IRS, right? Drop in the chat below if you're tired of paying taxes and you want to know how to save money. The first thing you need to do is get bookkeeping. People overlook this simple secret because they think bookkeeping is something they can do on their own. Now, what I know from experience, my MP clients, they didn't go to school for bookkeeping, accounting, or taxes, so they don't know what to do, right? So they need to hire someone to do it for them, not trying to do it on their own because they don't do it for a living. So the first thing you need to do is hire a bookkeeper or an accountant to help you do bookkeeping, because without bookkeeping, you'll pay the maximum amount on your income because you won't have any expenses that are legitimate expenses because, again, you're not familiar with what to deduct. So you're tired of paying taxes to the IRS every year and I always feel like you work hard and can't keep your money when it comes to your business? I got you covered. I got a free resource for you. 10 tax secrets that can help you to save money in your business and not pay all your hard-earned income to the IRS. Drop in the chat below taxes and I'll send you the free resource today. The second thing is to hire a team, right? You're making a lot of money, but you're doing it on your own. You're running your practice. You're doing everything. You're wearing all the hats. Well, one way to make more money and also reduce your tax liability is to hire a team, because when you hire a team, it increases your expenses, which decreases your income that's taxable. Third secret is to hire a family member. That's right, you can work with family. Now, I know our family dynamics may not be able to take this particular secret, but it's available to you. Hire your spouse or your children so you can create a culture that is family-oriented. You can also teach your children the meaning of work and build their work ethic, and then you can create more memories with your family when they work with you. Fourth thing is to buy assets. Buy assets such as equipment, machinery, and also vehicles so that you can be able to depreciate them over time. Depreciation is simply a word that means you're able to expense or deduct or write off the value of the example. If you purchase a car and you can depreciate that value of the vehicle, the cost of the vehicle, over time, over 5 years. So that means you can take a deduction of a certain amount of that value of the car, cost of the car. That's simple. So when you do that, you're able to reduce your taxable income and pay less in taxes. Number 5 is to hire yourself. Now, you can hire yourself as an employee if you own an S corporation or C corporation. Those two entities allow you to work as an employee, and you also can own the business. Again, when you hire someone, it increases your expenses. Hiring yourself gives you the ability to become an employee and reduce your income that's taxable. Now, if you're a single member LLC or a partnership, the IRS won't allow you to become an employee because they see you in the business as the same, with the exception of a partnership. A partnership, you're the partner and you can't become an employee. Number 6 is to offer a 401k plan to your team. That's a simple way to incentivize people to, 1, become a team member for your business, and 2, to keep them, maintain them, because having a 401k incentivizes people to come and work for you and make your team great. Number 7, you can get a clean vehicle credit for 2025. In fact, you can get a credit up to $7,500 maximum credit for a new vehicle that you purchase from a dealership. Now, there's certain things you got to do. Make sure you get a dealer that has registered the vehicle with the IRS, and then once they get the credit, basically you'll apply that credit to your taxes, in other words. So if you don't do that, then you're more likely to pay the credit back. And that's for vehicles that are basically 14,000 pounds or less than 14,000 pounds, which is your regular cars, vans, trucks. Number 8 is the home office expense. If you have a home office and you exclusively use it for business, you can deduct certain amounts of expenses, such as your rent, your mortgage, interest, phone, internet, cable, things like that that you use for the business. You can deduct a certain percentage of that for your business, right? That's a great way to reduce your taxable income as well. Number 9, if you have an S Corp, you can rent your home to your business. That's right, I said again. If you have an S Corporation, you can rent your home to your business. The way you do that is you want to make sure that you are researching in the area what particular, say, hotels or people that rent spaces to area, and see what the rate is for renting, say, a hotel space for a conference room or any venue that you can rent for a business meeting. And you want to use that same rate. Keep notes of who attended the business meeting, what was discussed, right? And you want to make sure that those things are recorded and maintained for your records in case you're audited by the IRS. Number 10 is you can take the work opportunity credit. In other words, you can hire people who may have been disadvantaged, say someone who is on low income, welfare, government assistance, or someone who's been incarcerated, who have difficulty getting a job. You can hire a person and get a work opportunity credit. Again, it's about building a team so you can save money in your business. And here's a bonus for you. Creating an accountable plan, an accountable plan. An accountable plan is simply a plan where you say, all right, I have a business, I have team members. If this team member, say, buys something on behalf of the business, so they travel for you, and they use their personal expenses, a personal vehicle for traveling to go to a certain site, and they track the mileage, you basically would have them report that mileage report to you, and then you would substantiate that, all right, make sure they report their mileage or the receipts, whatever they did for the business on behalf of the business, and then you would reimburse that person. Now, if you don't do that, then if that person was to buy something on behalf of the business, and you don't have an accountable plan, and you reimburse that person, that team member would have to include that reimbursement as income, and the business can't deduct that as an expense. So make sure you get an accountable plan set up and you use it for your advantage. I hope these 11, I give you a bonus one, 11 strategies can help you in your business so that you can pay less in taxes and save money and not pay all your money, hard-earned money to the IRS. If you like this episode, I hope it was valuable. I want to encourage you to like, share, comment, and subscribe to the channel. Thank y'all for joining us.